Taking advantage of the equity that you've gained in your home and getting cash out is an extremely hot topic these days, especially with the amount of property value has grown over the last 5 years. Now, in the state of Texas, a Texas A6 cash out is a whole different animal when it comes to financing, and that's what we're going to talk about today. There's a lot of different rules that go around this loan, and it's tough to navigate, and so you for sure want to have a professional that knows these loans inside and out in order to take care of you and make sure nothing goes wrong. At the very end, I'm going to talk about a few different alternatives that you can look at, but right now we're going to focus in on the Texas A6. So say you bought a home in the last 5 years. Say in 2019, you bought a home and you put 5% down on it. Well, that home has grown. Over the last 5 years, it's grown about 40% in value. So that $300,000 home is now worth close to $500,000, and you've got a lot of equity in it. But how do you access that equity? Well, in Texas, you got to do a Texas A6 cash out. So that's what we're going to talk about. So these loans are great, and you can take money out to do anything you want to do with it. You don't have to have a specific purpose, but they do ask you to declare that on the loan application. But you can use it for whatever you want. You can pay off higher interest debt. You can invest with it. You can buy other properties. You can buy a second home. It doesn't really matter. It's your equity and you can do with what you want. Now let's talk about this loan because it can get a little confusing. So first of all the rules in Texas are different than every other state, and it comes from the Texas Constitution, Article A6. And there's tons of laws in this part of the Constitution, but I'm going to break down the ones that are really pertinent to your situation. And the first thing that you're going to do when you do one of these loans is sign the 12-day disclosure, which breaks down every single bit of this part of the Texas Constitution. So you cannot commence or even start your closing of your refinance until 12 days after you sign your initial disclosures and the 12-day disclosure. So in a lot of other states, you can get cash out in 5 days or less. In Texas, it's 17 at minimum because you have to wait 12 days from that date before you can sign your documents, and then you have a 3-day waiting period and it funds on the 4th day. If all goes perfectly, it's 17 days from the get-go. So some of the other rules that are very particular to this is there's a rate and fee cap of 2%. The lender, the title company, and all other fees cannot be more than 2% of the loan amount. Now, if you have bona fide discount points, which are percentages of the loan amount paid in order to get a lower interest rate, you can pay those as long as it truly buys the rate down. But all other fees can't be more than 2% or they have to be waived. So many lenders have minimums on these loans between $100,000 and $125,000 because it takes that much in order to get these loans closed. Next is there's a hard cap on 80% loan to value maximum. You cannot take a cash out that goes past 80% of the value of your home. So if you don't have that much equity, you're not getting cash out. So even if you want to get a second lien, that can't surpass that 80% combined loan to value ratio. Texas is very hard and fast on that rule and always has been. And that's what saved us when the 2007-2008 crash came. We didn't get hit nearly as hard as other states like California, where they went to 125% and people were using their homes like ATMs and taking cash out as soon as they possibly could. Every time the value went up, more cash out. In Texas, doesn't happen. And that takes me to the next rule is you can only take a cash out once every 12 months. So once you do a cash out, you're in that loan for the next 12 months, no matter what. If you want to do another loan and take cash out, you can do that, but it's 12 months later. Or if you want to change that loan from a cash out back to a rate and term refinance, it's the same rule. 12 months, refinance, it turns back into a rate and term loan at that point. So if you didn't need cash out that second time around, that's okay. Just turn it back into the rate and term if you wanted to get a lower rate and a lower payment. A couple little nitpicky rules is you got to close a Texas cash out at a title company or an attorney's office. Not sure where this one came from, but probably fraud, and they just made it so it couldn't happen that way. In front of a notary, at a title company, or an attorney's office. One that always gets people slipped up is the 10-acre maximum. So the state of Texas, many homes have acreage. Now, it's not all, cattle in your front yards and things that everybody thinks when they think of Dallas and Fort Worth, but many areas around here have more than 10 acres. And so if you have more than 10 acres in your property and you want to take cash out against it, I'm not saying that you can't, but you got to jump through a few hoops first. The first hoop is you'd have to parcel out your property into a smaller acreage. So if say you have 100 acres and your house sits on one, and then the rest of it is farmland or, forest or whatever, you could parcel out that 1 acre to be your homestead and then take cash out on that house in 1 acre and have the other 99 acres separate. So, like I said, it can be done. It just takes a little bit of work. Also, you can't get an interest-only loan on a Texas cash out. It's only fixed rate loans, and there are options where you can do either a 5, 7, or 10-year ARM, but those are few and far between. Typically, it's a 30-year fixed rate note. Also, you must have an appraisal. You can't get any of the Fannie Mae or Freddie Mac appraisal waivers on these loans. You must have an appraisal in order to validate the value. Also, if you want to refinance a home that you just bought in the last 12 months, you can't do that. It has to be at least 12 months since the date you purchased it. Now, I know all these rules seem very stringent, and there's a lot of other rules that go along with this, like waiting periods for bankruptcy or foreclosure. I know I've told you a lot of things, and there's lots of other rules that go around this, but these are the ones that come up most often. What you need to understand is these loans serve a purpose, and there's a lot of opportunity in a Texas cash out, but you got to be careful on who you do it with and the advice that you get around it. Now, I told you at the beginning that we're going to talk about other options here at the end, and there are other options out there, but they also kind of have to go with this Texas law. Now, what I didn't mention is this is for primary residences only. This law only pertains to your homestead where you live on a daily basis. If you want to take cash out against a second home or an investment property, those operate at the same rules that they do for any other state. But if you're talking about a primary residence refinance, this is what we're talking about. Now, the other options you can do are called HELOCs or HE loans. A HELOC is a home equity line of credit, and a HE loan is a home equity loan. So a HELOC is an interest-only type loan, and it's usually a variable rate based on the prime plus a percentage. A HE loan is going to be a fixed rate payment and a fixed term on a particular interest rate of that day. Most I see are 15 or 20-year terms. And these are second mortgages that go behind your first. So if you have a super low rate that you got during the COVID era and you want to take some cash out, it may not make sense to refinance your entire home at a double the interest rate. But you could look at doing a HE loan or a HELOC to supplement and get the cash out that you want. Now, if the first mortgage you have is a cash out, say you did take cash out already, and that is a cash out refinance, you cannot do a HELOC or a HE loan behind that mortgage. You can only have one cash out loan at the same time. So in order to do this refinance, you'd either have to do a full-blown refinance of the whole mortgage and get cash out, or you would refinance that loan into a rate and term refinance and then piggyback it with a HELOC or a HE loan behind it. So lots of different options. The important thing is this is the number one asset in your life, and you need to take the most care of it. So consult with a professional who knows Texas cash outs because it's super important that you do. If you have any questions about your mortgage or anything mortgage or real estate related, please reach out and please subscribe to my page because great stuff like this is going to come out all the time for you to view. Have a great day. We'll see you soon.